Hello all, in this video we are going to discuss IAS 36 impairment of assets. So let's get started with the definition. IAS 36 impairment of assets defines an impairment loss as the amount by which the carrying amount of an asset exceeds its recoverable amount. So to put it simple, if carrying value of an asset is greater than the recoverable amount, we need to record an impairment loss in the statement of profit and loss. So in this video, we are going to discuss, basically what is the carrying value of an asset and what is the recoverable amount of an asset, and why do we need to record an impairment loss if carrying value of an asset is greater than the recoverable amount. So to begin with, what is the carrying value? The carrying value is nothing but the value at which you carry the asset in your balance sheet. So for example, let's say that you have a property, plant and equipment and you state it at 5 lakh in your balance sheet. So this 5 lakh becomes your carrying value, and this carrying value is calculated as the difference between cost and accumulated depreciation. So what is the recoverable amount? So recoverable amount is the higher of net selling price and value in use. So let's discuss for what is net selling price first. So net selling price is calculated as the difference between fair value minus costs to sell. So the fair value is nothing but the market value of an asset or the price at which you sell the asset in the market. And costs to sell is nothing but the cost that you have to incur in order to execute the sale. To put it simple, it is just the cost of disposal of an asset. Uh, Without incurring these costs, you cannot sell the asset. And value in use is nothing but, for example, let's say that you have a mission and you're planning to produce some products from the mission, and you're planning to sell the product in the market. So this mission generates you some cash flow because you're producing a product from the mission and you're selling the product in the market. So this mission it generates some cash flows. So the present value of the estimated future cash flows arising from the mission is the value in use. So basically you need to calculate the cash flows that you are expecting to come from that asset, and you need to calculate the present value of the cash flows, and that is known as the value in use. But why recoverable amount is higher of net selling price and value in use? Because see, just think rationally. Let's say that you have a machinery, and by selling the machinery in the market you get 5,000, but by using the machine for production you get 10,000. That is the value in use. So which one will you choose? You will sell the asset or will you use it for production? Obviously you will use it for production, because by using the machinery for production you get 10,000 rupees, but by selling the machinery in the market you get only 5,000 rupees. Then obviously a rational person uh, will go for using the asset for production. But why do we need to do all this? Why do we need to record an impairment loss if carrying value of an asset is greater than the recoverable amount? See, the prudence concept of accounting tells us that estimate all losses and expenses, but do not estimate any gains. So for example, let's say that the carrying value of an asset is 10,000, but the recoverable amount of the asset is only 5,000. In that case, your financial statement numbers will be overstated because the asset is capable of recovering only 5,000 rupees, but you're carrying the asset at 10,000 rupees in your balance sheet. So your balance sheet is overstated. Your financial statement is overstated. So the readers of the financial statement will not be able to make a wise decision if the balance sheet is overstated. So in such cases, if the carrying value of an asset is greater than the recoverable amount, you need to bring down the value of the asset to its recoverable amount, so that the readers of the financial statement can take a wise decision.